Hey traders, Michael or Mini Frost here. You're here for another episode of Common Sense Market Analysis. Today's Hump Day, September 3rd, 2025. You're looking at a daily chart of the SPY or spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, let's start with the fact that she's up a little bit more than 0.5%, closing above the 20-period moving average, home base. Yesterday we closed pretty much right on it, and today we closed over it. And today was a perfect example of why the close is so important. It's not about how they trade within the first 5-10 minutes of the day. It's not about how they trade intraday towards lunchtime in the afternoon. The most important thing as traders that we need to look at in a given trading day is how they close them. Yes, that other stuff is important to a certain extent, but the key thing as traders we look at is how the market closes. That close gives us a whole ordeal of information. Depending on how a market closes coming into the end of the day can give us key puzzle pieces of information that we can use to our advantage for future trades. Let me explain why the close was so important today. So here's the number I was talking about yesterday and last week as well, 643.45. In last night's video, I mentioned that I'm using this number as a longer term pivot number. Staying above and closing candles above, she's bullish and she has the opportunity to go ahead and fill this gap right here, go ahead and test the most recent breakdown candle high, and then even an attempt at the recent all-time high. Closing below 643.45, the very first order of business that she's going to want to take care of is complete the unfinished business. Where is the unfinished business? Well, none other than this gap right here at 640.27. The low of today was 640.46. Came up a tad bit short, declaring it as unfinished business. So that will be the very first place that she'll want to head to on the downside. So generally speaking, the market doesn't like to leave gaps unfilled. She'll want to go ahead and complete that unfinished business being the gap. So this essentially falls under the first time, best time rule. We came up short of the gap, so the second time around, she's more likely than not to go ahead and spike it. First time, best time. So what do we have down below? Well, she can go ahead and spike it, possibly get down to this big time breakup candle low, or even she can go make an attempt, take out these lows and head to the 50-period moving average. The 50-period moving average happens to fall in line with an important number that I mentioned last week. That number comes in at 632.08. As we could see coming up to the number we found resistance right here, we already came up short of the number the first time around. So technically, this also falls in line with the first time, best time situation. But generally speaking, this area, 632.08, is going to be a bull-bear battle. Closing candles below, then that starts to open the door for another leg lower. I think it makes sense for me to jump over to inside the numbers because I think it will kind of help formulate my reasoning and also explain it a little bit better. So stay with me because I promise this is all going to make sense in a moment. By the way, if you haven't already, real quick, just hit that like and subscribe button as it helps me and the channel out, and I would appreciate that very much. Alright, so let's jump right into it, starting with the 0 dark 30 notes, well before the market even opens. So take a look at this. No accidents or coincidences. She's back testing the important number mentioned yesterday at 643.45. We pretty much opened right on it. So you could have guessed that was going to be our morning pivot. Staying above, she's going to want to test some higher numbers. And staying below, we got some support. Now, we never really made it higher than the pivot, so we don't really need to worry about that. But on the other hand, we did manage to pick up some nice long trades this morning for Inside the Numbers and live room members. Take a look at this. The first support zone on the board comes in at 642.45 to 641.60. All right, here we go. Right at the vertical line is today's activity. The pivot is in green and the support zone is in blue. The front end number was 642.45. The low right here, first 5-minute candle of the day, was 642.41. Spiked it by 4 cents, pretty much a no heat trade. We grabbed the base hit. Base hits put you in the Hall of Fame. The target up above was none other than the 643.45 number. We didn't quite make it there the first time around, came up short, and generally speaking, it's good to exit in front of the number. We like to sell into strength, leave the few extra points and cents to the pigs, and take a look at what happened at the back end of the support zone. The back end number is at 641.60. The low right here, 641.59. And then she ripped it right back in the other direction. Where to? Finally reaching the pivot and even spiking above it. Why did she spike above the pivot? Well, because of the first time best time rule. The first time around, we did come up short of the pivot, so the second time around we're looking for a spike of it. And here's the thing, we didn't make that much headway above the pivot. Started closing candles below. She was playing around with this number for a little bit, making her way down to the back end of the support zone again. Once again, finding support off of it, using the 642.45 number as overhead resistance. We got back below it, eating time off the clock right here in this area. This is torture time. We don't trade this. This is a whole different tape. It's torture time. No one likes to be in torture time, so we just leave it alone. But look at this. We never made it to the gap right here. We came up short. And then where'd she make it back to? None other than the pivot. The pivot is the important number I've been talking about. So now going back to my original statement of why the close is so important is because if we never made it back to the pivot, closing candles above, it wasn't by much, but we still did close above the important number. If we didn't do that, and we managed to stay in this area, let's say she did manage to go ahead and fill this gap down below, maybe even got some more downside behavior towards the end of the day, whatever the case is, if we never made it back to the pivot and we closed below in this area, then I would tend to believe we're in a more of a bearish state. But because we came up short of the gap and made it all the way back to the pivot, that was a pretty good rally at the end of the day, the last hour, right back to the pivot, closing candles above. That makes me believe that she still has a fighting chance to stay in that bullish position and possibly retesting the previous all-time high, or at least a little bit more upside behavior before we go back to retest the number once again. This isn't the only time we're going to see this number. It's going to be pretty relevant throughout the entire week. Closing candles above, she's bullish. Closing candles below, she's bearish. And she'll most likely want to go ahead, complete the unfinished business that we missed today, and possibly even spike it and go down lower. First time, best time situation. How about a little lazy swing trader intermission break? Yesterday, I forgot to mention that we had a profit target alert for PRU, Prudential Finance. We had the entry alert at 110.07, and we had our first profit target at 107.07, locking in the risk-free emotionless trade for a 2.82% gain. And obviously, we're still looking for more. But we locked in profits, the base hit, the risk-free emotionless trade. No one ever went broke taking a profit, and we'll let this one ride like the wind. Not to mention, we are running a Labor Day special for the lazy swing trader. And just take a look at this. We had a 100% win rate in August. Here's the enter date, the exit date. You could go back to the charts, double check the work. Whatever you want to do, it's all here for you. If you've been contemplating trying out the lazy swing trader, I'm telling you right now, this is your opportunity. 100% in August. We already have one trade in the books for September. And if you're still unsure, guess what? I'll give you a free swing trade on me. You can click the link in the description below, and I'll send you a free swing trade from the Lazy Swing Trader watch list. Get the entry target, the profit target, the stop loss, essentially everything that you'll get with the Lazy Swing Trader. So it's for you to kind of test out the waters. Both of these links will be in the description below. This deal ends Saturday. Today was honestly a bonanza day for the members. We had live room and inside the numbers making money all across the board. I mean, just take a look at this. I literally tried my best to fit a majority of the people who had profits for today, but I ran out of room. That should kind of just speak for itself. But overall, very nice day all around the board. Great job, guys. Also, not to mention stocks on the move. DLTR has hit its entry target, first entry 99.22, and the second one at 97.98. How you doing? I mean, really, come on. Need I say more? Literally on the dot, and then ripped it right back in the other direction. We had a ton of traders making a little bit more than $1 on Dollar Tree. How do you like dem apples? Leave a comment below if you took any of these trades, whether it was the SPY trade this morning, Dollar Tree, the Q's numbers were good, IWM was good, everything was good today. Leave a comment below, I'd love to hear. What about the folks at Camp IWM? Well, she's actually down on the day by 0.10%. Nothing too crazy, pretty much flat. But take a look at what she did today. She went to complete the gap right here. The gap comes in at 235.17. We made a high of 235.26. Oh, it just so happens that it falls in line with our first number for overhead resistance for Camp IWM. How you doing? So here's what we got. We completed and filled this gap. We're still above all the moving averages, so the trend is your friend. She can still go back to this overhead resistance zone we put on the board since last week. This is a place where Camp IWM shouldn't just waltz right through. Just by the looks of it, we are forming a bullish flaggish pattern, so she is building up energy, recocking the gun for another move higher. Now, we did come up short the first time around, so the first time best time principle does apply to the front end of the overhead resistance zone, but that's not to mention that this zone is still resistance. It's a zone for a reason. She could spike the first number, make it towards the second, the back end number, just throwing that out there. But right now, she's in a pretty good position, as long as she's staying above all the moving averages. If she can't sustain price above, first place is this breakup candle low that she's going to want to head to. That's a spike of the 20-period moving average, home base, possibly even reaching this gap right here. And then also you got the 50-period right below. So that's what we got for Camp IWM. What about the folks in the transportation department? Well, look where she found support off of. The 15,650 number we mentioned last week. She already used that as support once, used it as support twice. Yesterday, we did manage to close above the 50-period moving average. Now we're below and pretty much right on top of the 20. So that is a little bit of some weakness. She's down 0.41%, but she's treating the support zone pretty well. If we manage to start closing candles below the 20-period moving average, the first destination is going to be to fill this gap right here and possibly even spike it down to the 200-period moving average. What's also interesting information is that we just missed this gap up above, so that is some more bearish behavior, not being able to complete this. That makes it unfinished business. That's what we got for the transportation department. What about the Q people? She's up 0.79%. Pretty nice gap up from yesterday. Completed this gap up above. She tried making her way towards the 20-period moving average, came up close, couldn't quite get there, and we did manage to close below it. So that's definitely the next destination that she's going to want to head to. More likely a spike of the 20 period, trying to get up to this overhead resistance at 574.66, the most recent breakdown candle high. Might want to jot that number down and put it on a sticky note. Down below, you simply got the 50 period moving average, and then this gap coming in at 565.62. Came up short of that gap as well. How about the financials? She's down 0.17%, and this number mentioned yesterday is still showing importance. The low today, 53.13. Yesterday was 53.12. The actual number is 53.10. That coincides with this most recent big time breakup candle low. It's around the vicinity of the low, around 20% give or take. But we can definitely say that the breakdown and breakup candles work. They're important. It's always something to take note of. And we're still managing to close candles above it. The next place above is she has to fill this gap, and then she's already back to testing the all-time high. We're above all the moving averages, so the trend is your friend until she throws your shit out the window. As soon as we get below 53.10 and start closing candles below, she's going to want to head to the 20 period, even the 50 period moving average. The gap right here is the midpoint of the two. So this area is going to be an important target. But as the saying goes, if there's nothing wrong with the financials, then it's highly unlikely that there's nothing wrong with the overall structure of the market. Also, I forgot to mention that I'm now doing numbers for Tesla. Take a look at the first support number, 329.20. How you doing? To the right of the vertical line is today's activity. As you could see, this number was very important, started to close candles above, and then ripped it for a nice little rocket ride, just in case anyone's interested in Tesla. So take a look at SMH. She's down 0.02%, so pretty much flat. That's a rounding error, and she continues to close below the 20 and the 50 period moving average. That is some bearish behavior. We're near/approaching these lows right here, so getting below there, we can expect another move down. There's a pretty big gap between where price is currently at and the 100 and 200 period moving average. A lot of space. a key number that pops out at me just looking at the chart is this big breakout candle low. Just so happens that that's pretty much the midpoint between the 50 and the 100 period moving average. And you guys know, and I've proven it time after time again, and my dad has proved it time after time again, is that the midpoint phenomenon works. That is going to be an important number. I would write that down and put it on a sticky note. If we do manage to recapture the 50 period moving average, the first place is going to be to fill this gap right here and then possibly head towards the 20 period moving average. But there is going to be some overhead resistance at this area because that is the most recent breakdown candle high. With that said, we're going to pull the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm 𝐼𝐞𝐵. Don't forget to like, comment, subscribe, all that good stuff. You got both the links in the description below for the Labor Day special that's going on and also the free swing trade. I would definitely take advantage of that while they're both here. You guys all know I appreciate each and every one of you so very much. I hope everyone has a great rest of your day. Stay safe and take care now, folks.